On the markets with Mimi Duff, investment professional at Gen Trust, and Dana Daria, she's co-CIO at Envestnet. Did either Mimi and Dana, did you see this piece on the endowments? Did both you ladies do 50%, just no problem in the past 12 months? Mimi, I'll start with you. That's a good return, and I don't think it's going to happen again, is it?
Well, those numbers are pretty magnificent, but I think we have to keep in mind how much just the S&P is up during that same time. I think I saw Wash U, and I hope I'm not misquoting here, was up something like 65% through June of the year. So some of these endowments have really had stellar performances for sure. But if we think about the recovery we've seen in the past year and how much asset prices have moved, I think it's certainly within possibility.
You like the recovery trades, and I guess there's another piece in the journal that I thought was interesting. Once, and maybe we're seeing it, fingers crossed, once Delta starts subsiding more, we could have another pretty strong, like a re-recovery that might be pretty strong. So you still think stick with some of the recovery plays, Mimi?
Absolutely. Absolutely. I mean, we're in some late innings here, but we know there's so many disruptions still occurring. So we do stick with the recovery trade, and we think there's some degree of kind of getting used to this. You don't like tech as much as before, and even you're underweight just in general now. Taking what is that? Taking some off the table because we've had such big gains. That's accurate. We've taken some chips off the table. The second half of the year, we just see a bit more risk potential, both from higher rates, possible tech regulation. That's right. Dana, do you feel the same way in terms of not being quite as bullish as maybe in the last year or so?
You know, I think the market fundamentals are good. I agree on reopening trade being there on the other side of all this agita that we're looking at in the markets. I do think if you're an investor and you need to sit through the next several months to kind of get to that, there's a lot going on, obviously. Debt ceiling, taper talk, inflation doesn't seem to be going anywhere, consumer confidence down. So I think there's a lot of volatility that the markets are going to have to deal with in the next, month, 2 months, et cetera. But I agree that on the other side of that, there's constructive financials. When you say inflation's not going anywhere, what do you mean? It's not going away, or it's not getting worse? It's ticking up a bit. We actually had Fed Chair Powell now kind of admit, hey, this is frustrating. We know the Fed has been saying all along it's transitory. We're going to get past it. Now we're starting to even hear the Fed say, yeah, it might stick around to a certain extent, a little more than we thought. Supply chain issues aren't correcting as quickly as we had hoped. It doesn't necessarily mean there's going to be much change in how they're approaching this, but I think it's just kind of confirms what we've seen in the data that in some aspects of inflation, I mean, rents, housing, et cetera, if you're a person on the street kind of living through this, you're feeling it. And I don't think it's going away anytime soon. Well, I'll start with you on this one, too. Then we'll go back to Mimi, Dana. But let's talk about one of the features of the last 3 weeks, and that is the move back above 1.5 on the 10-year. Can it be for a good reason? Can that be bullish for stocks? Possibly, right? There's a lot that goes into that number. I mean, it hasn't even made a lot of sense to a certain extent, given where inflation has been over the last several months. But it's likely the movement in the FOMC dot plots to a certain extent that moved that rate, or certainly had a lot to do with it. So we saw the Fed now, the dot plots, which are just guidance, right? They don't actually mean anything. They have a terrible record of actually predicting interest rates. But we did see that now we're looking at possibly in 2022 a rate increase, and then two or three, I think it's 3 in 2023. So I think that had something to do with that. Mimi, it does seem to affect tech more. Is that part of your reason for exiting some tech? Because do you feel rates are headed to 2% eventually? I mean, near term? Eventually, yes. This fall, probably unlikely. I think we'll probably find some support at 175. Look, I think everything Dana mentioned is accurate. And I would add to that there's some, the global central bank theme has become slightly less dovish. If you look at UK rates, for instance, they're up 50 basis points.
as a data point. And so many rates are up globally. So the menu, if you will, of global yields is just ratcheted up. And then I would say, to the extent that, the pace of the tapering that occurs, or I'll use Lagarde's comment, calibration. I like calling it calibrating. Powell alluded to them being done in the middle of next year. That type of pace would be significantly faster than previous tapers. So, and I think that would open the door for higher rates. Right now, the Fed is buying a lot of securities. We need to keep that in mind.